S&P 500 drops after hours on historic downgrade of U.S. government debt. Nasdaq follows suit, is unable to get above a critical level. We'll explain why. AMD reported after hours on a beat. Stock is trading up. We'll explain why you need to be concerned tomorrow. Elf Beauty's at all-time highs, crushing earnings. What the McClellan summation oscillator is telling us. 10-year Treasury is back over 4%. Industrials make another all-time high as Caterpillar breaks out to all-time highs. We'll explain why. We have a ton to get through. Let's get to it. Hey everybody, welcome back. We have a lot to go over, and on top of that, we have a little bit of news that we should really address to start. Fitch comes out and downgrades U.S. debt. This is obviously not great news for the U.S. The debt rating being cut. Why is this important? Because it affects the borrowing rate. This is from FT Financial Times. It's important. This is kind of interesting too. One of the reasons why they're stating they did it was the erosion of governance. If you read the article, one of their main gripes is how hard it is for them to get anything done with these debt limit negotiations and these talks. And it keeps coming down to the wire. That, and also you have this enormous amount of money that is now going out in monetary payments. And so they came out and they downgraded it. You have Yellen coming out saying it's not that big a deal. They're outdated. People are bashing it. Bottom line is they did it. And it's going to affect U.S. debt, period. Now, the market's down after hours. And what's kind of crazy to me is this is the move down. So they downgrade the debt and we lose 40 basis points and we're already trying to get back up. So if we take it from that 40 basis point move and we look at this after hours, now who knows how we wrap up later, you already gained back about a third of the move, which to me is kind of crazy. Now, we're going to have to see how this plays out tomorrow. Obviously, we have a bunch of earnings names to go through, but it's very interesting to me that this is happening. It's also interesting what happened in the bond market. But if we look at this on an hourly basis, we have the news from Japan over here, and this is when they came out with their news about what they were going to do with rates. And now here we are with this debt issue, and they're trying to blow it off, candidly. Now, whether or not we're going to blow this off or not remains to be seen. I don't think this is a blow-off event. I think what you're seeing after hours, to be completely candid, is that you're seeing institutions really not want to show their hands after hours because they really can't get out of their stocks. That's my opinion. I think they're going to hedge tomorrow. Do with that what you want. Comment below if you agree, disagree. If you watch these videos, you're going to get opinion. It's really that simple. Doesn't mean I'm wrong. It just means it's an opinion. This is a much bigger deal than they're making it out to be. I'm surprised that you're not down more, and we'll see how this plays out. But if we just look at the futures market, we're under the 12, which is not really that big of a deal. The larger issue for me is that we are undercutting the RSI. Now, whether or not you use RSI the way that I use it, again, this is just, I want to be really clear. This is how I use it. You use it however you'd like to. See how you're making a higher high up here? See how you're making a lower lower here? See how you're undercutting where? That, to me, is a negative divergence. I need to pay attention to what happens there. That's substantive, and I need to see how we react. Now, so far, every sell-off, all we've done is gone nowhere. I'll buy puts, I'll make a little bit of money, and then I get stopped out. It's over and over and over again. And this could very well be blown off again. For me, when the futures market starts to dip below the 70 on the RSI, that's something that I pay attention to. You could pay attention to it here and see how it acted. You could pay attention to it here and see how it acted. You can just keep going through it over and over again and see if it's something that you might want to pay attention to. Maybe there's something to it. But that's up to you and the way that you trade and what you want to do with this information. All I do is provide the information that I hope that you can utilize the next day and do something with it. For me, looking at this, I don't see this as some great big pullback, but the fact that we're only down 30 basis points on a downgrade to me is pretty insane, and I would expect to see more of that, especially certain sectors, especially tech. I would expect to come in. Now, you're down a little bit more on the tech names, but you're sitting again at that 12. I use a 12, a 22, and a 55. You should use what you want. Now, for me, again, I watch these and it gives me pause, but it can give me all the pause I want. But if it's not going to crack, then it's not going to crack. I just have to be aware of this, that this is out there. I have a negative divergence out there. I really haven't cracked and rolled, but you're starting to again, but that kind of follows suit. Now, Apple comes out with good earnings, Amazon comes out with good earnings, you could be looking at another rally. The US could do something about this debt issue. There's things that can happen that could move the market. That said, there's a level in here that we just can't get through no matter how much we look at it. No matter how much we try to get through it, we can't get through it. We're trying, we keep trying. And this is when Japan came out and made their statement. Tries, fails, tries again, fails. You don't have one major push over a higher high with a confirmation since this bar. Not one, not one. And that is somewhat telling to me, and it's becoming a concern of mine. So I want to keep my eye on this. As far as I'm concerned with earnings, they've been pretty good. I don't think anyone's really going to complain about the earnings front. Now, we're going to get into AMD tonight and what they said, but Meta's earnings were good. It's really hard to look at Meta's earnings and say that you have an issue with it. So from my perspective, I thought they were very good, and you're building this little flag. Now, again, we're going to have to see how Meta plays out tomorrow. I added to it today. I have to see how it plays out tomorrow. I'm very surprised that we're not down more on this move, but we're not. And then you look at Google. Great earnings. So overall across the board, we're seeing great earnings. And what else we're seeing is we're seeing people want to commit capital to winners. And we're seeing it over and over and over again. It's not like we're seeing it once. And let me just walk through this before we get into some of these names. The UPST is one we're in at around 37, 38. It's at 72. It's been an absolute monster for us in the room. I was looking for the gap fill. We're pretty much at the low end of that gap. But a true gap fill to me is the close. That puts me here around 76, but my target was the low end of this, but a true gap fill is to the previous close from where the gap happened. So that does look pretty realistic. Now, again, you're going to be dealing with rates issues now. When you downgrade, understand this and how this works. When you downgrade the government debt, all other debt goes off what AAA is. So in other words, it's kind of convenient when you look at high yield today and wonder why high yield was down out of nowhere, or we're wondering why the 20-year is selling off. I wonder why the 20-year is down. Somebody always knows, okay? And then we're seeing it right now. It's all connected. So that's why, to me, I would think tech would take the hit. It also does affect people that lend money. So it could affect the UPSTs of the world. It could affect people if you're going to go out there and get a car. It can affect those groups. So if we take a look at this and we watch how this is heading up here, just be aware of it. We've done exceptionally well with it, but you're seeing money being committed over and over again to the names that people want to be in. PLTR, look at this. They're down a little bit after hours, but what are you down, 20 cents, 30 cents? Look at how that's hanging in there. And you're seeing this over and over again in these names. Doesn't matter. I understand they're completely different spaces, but you're seeing follow through across the board. If we take a look at names like Spotify that we all thought were going to just completely implode, and from the bottom up, you're at an 11-point bounce already. So you're seeing these bounces and we're seeing money being put to work. Now, for me, looking at AMD this evening, I'm very surprised that AMD's up and it really stopped right at critical level. This 121.66 for us, this has been a real bone of contention in here. And I'm just going to drop a line on the weekly so you can see exactly where you stopped and kind of go from there. All right, so let me just move that up a little bit, because this is pretty glaring where you stopped. Okay, that's where you stopped. So you're literally stopping here, that you stopped in August of 21. And then since you broke this level, you were unable to get above it. Bonk, bonk. And here you are again, twice. Look where you closed. Can't get above it. For me, I didn't think this was a great earnings report. I thought it was good. I did not think it was great. They came out, you're in line across the board. They lowered revenue guidance. All right, so just be clear about that. They lowered guidance on revenue. So to be very clear here, AMD sees third quarter revenue of 5.7 plus or minus 300. That's great, but this is the estimate. So this is what you're giving me. So if you're going to plus or minus me, it goes both ways. That's why you give this number. And this is what our estimate was, and this is what they're coming in. Now you're promising that these other chips are going to come out by fourth quarter. At the same time, non-GAAP gross margins are 50% down from 54%. So your gross margins now are dropping. That's down about almost 10%. It's a big drop. And this is something that is happening. Taiwan Semi talked about this. And this is happening where people do not want the old inventory chips. They want the newer chips that are coming out. Well, I have a company that's trading up that just said revenues are going to be lighter versus what they were supposed to be, that missed gross margins. All on the talk because they're going to have a fourth quarter AI chip, this MI300 and 250. Great. That's all good news. Who's going to make it? Because Taiwan Semi's at capacity. So who's going to make this chip? Okay, you're going to have to build out. This goes back to Saturday's video. I'm going to link Saturday's video at the end. The people that are going to make it, Lam Research, which just happened to be at all-time highs again. AMD, which is coming out with earnings, which guess what? You're heading to all-time highs for earnings. Who else hit all-time highs? KLAC, AEHR. Get it? It's going to be the semiconductor equipment manufacturers that have to ramp up through in order for AMD to get where it needs to go. Anything that slows down in that food chain is going to affect AMD. It's not going to affect Lam Research, because they're going to send the material. It's going to be on the foundry side and then putting it together and getting the stuff out the door. So to me, I'm very surprised that this is even trading up. We'll see what happens tomorrow. Maybe the AI hype continues to lift it. It's very possible. This is a very different situation to me than what you have in the video, which actually has the chip, has it out there, has demand, and is already in products and already being sold and eating up all the capacity utilization of Taiwan Semi. I'll link that video at the end. You might want to listen again to what I just said. There's a lot to it. And if you follow that process and how this plays out from the beginning of the cycle, which you're in the beginning of the cycle, to the end, you'll see a difference. And I can't stress that. So for me, on that news, when it came out, the very first thing I did was I bought the SOX. I shorted this. I'm doing very well with it. I'm just sitting with it. I'm also short SOXL. I'll see how this opens tomorrow. I'm not really crazy about what I'm saying, but for those that do ask what I do on news like that, that's what I've done there. I don't want to come in and be short AMD because you don't know who's going to upgrade it based upon that, how they're going to extrapolate it out and what they're going to look at. But I do want exposure. And so what I did was I bought here and I shorted SOXL. Now we have a ton to get through. And I just want to point out the obvious. 10 years back to 4%. You look at the close right here. It's a new close. That's a new close. All right. So it's higher than here on the close. You haven't been a close over this since back here. And it takes you all the way back to November of 22. This is not where you want to be. You don't want to be here. You don't want to be seeing this happen. And we're watching it happen. And I think that this cut, or this downgrade, I should say, I should use the correct term, is a much bigger deal than they're making it out to be. Now, you're seeing a weaker dollar, and a weaker dollar is good for Caterpillar. It is good for John Deere because globally they can buy our goods and services. And so you're seeing names like Caterpillar benefit greatly. So before people say, well, the dollar's up, I'm not talking about this. I'm talking about this and what they've been selling. You're down 13%. That means that the cost of goods in some countries are down substantially. It is a big deal if you're going to buy a high ticket item. Very big deal. That said, breaking out to all-time highs. I had a couple little trades in this today. I didn't do very well with it, quite frankly. I played a lot with John Deere. This is not over. When you close like this, you might pull back tomorrow because of the downgrade, and that may affect some things because now it's going to affect the dollar as well. But that does not look to me like it's over. When you start closing up here at the highs, that's far from over. So that's definitely something that I'd pay attention to. They're also not as interest rate sensitive as tech. So you could see that flow, and it's very hard to think that that move is going to stop this train. I mean, that is just an absolute monster. Again, I follow up on these. Please comment below because I follow up on these ideas, just like I'm about ready to follow up on a couple other ideas that we went over on Saturday. And then I followed up on yesterday because I think connecting the dots and watching how this stuff plays out makes people better. And I want to take a second and thank everybody for sharing these videos. I get emails all the time from people saying that they're very happy that they found the channel and they're finding it through people that are sharing the video. So I greatly appreciate it. Please keep doing that so I don't have to run ads, which the algorithm likes and then would show it more. So I do appreciate that. I want to just talk about this. So this is the McClellan summation oscillator. Now I want you to think of it as a market breadth indicator, and I want you to think of it as a long-term indicator. I'm not going to get into the mechanics just for time's sake, but what I always look for is I always look for patterns. And you're trying to get ahead of those patterns before they happen. So the one thing that is becoming pretty glaring to me is I keep saying I'm waiting for this possible pullback and then we'll see if it happens or not. See these crosses right here? When you cross on this here, okay, and then you just kind of mark these off. Let me turn this on so it doesn't go away. But see what these little crosses right here? Even here you had a little bit of nonsense. and you go up here and you just mark off where they were. They're pointing out highs. That one's way off, isn't it? You're over here. So you're pointing out these highs, this cross. And as you point out this cross, this is what I am watching. See how that's starting to get tighter and tighter together? That's something that you need to watch. And the reason that you need to watch it is because the last time that these were up at this high, now that you know what I'm looking for in the cross, you go to the second portion of it, which is how is this relative to when we had other areas where we stopped at? And I'm glad you asked. You see that level there? See how you're stopping right there? I don't know if this is going to lead to a pullback, but this kicked down and I need to pay attention to it. So now you can see here, you can see here, and now where are we? Here. And what happened at every single one of these? That was a short-term top. It wasn't the end of the world, guys, but it was a short-term top. Does that mean it's going to be one this time? I have absolutely no idea, but I know that I'm paying attention to this, and it's something that I would pay attention to too. If you want, I can go through this more on Saturday. Just comment below. Now, I just want to go through this because I'm getting a lot of DMs on Twitter and through you. Thank you. You guys make your own decisions. I just point things out. When you see a pattern, you pay attention to the pattern. That's it. Okay. I have no idea that this was going to be this good. I just pointed out very simply all these earnings beats over and over and over again. And I called it the anti-snap who just blows up every quarter. And you can see you're hitting all-time highs right now. You're at 137.49. Maybe this holds overnight. It seems to me that they're just not going to care, that people are just going to start throwing in the towel and just randomly buying it at this point because it's just been crushing. And I think we're at that point where it's just earned GOAT status. I think we're getting there on the institutional side, quite frankly, where they've had enough of second guessing whether or not they should be in this for the next 12 months. We'll see how it plays out tomorrow, but this is going to be an absolute monster that you're going to watch. If you go back and you look at Saturday's video, we went over it. If you look at Monday's video yesterday, we went over it as well. I just want to point out some things here. This is one we talked about on the downside, and we were talking about shorting it. We've done okay because we're doing it through puts, not common. The purpose of me showing you this is so that you can understand you don't need to go find 50 trades. You can find one that actually works and just leave that trade on. XPEV still hanging in here. It's kind of interesting, downgrade after downgrade. And I want to just point this out, downgrade after downgrade, and we're still keep closing over that open. Still keep having negative news, still keep closing over the opening price with green bars. And I think that's very important. And I think it's something we should pay attention to. I'm always asked about Tesla. I keep waiting for Tesla to break down. It keeps not breaking down. At this point, it's beyond exhausting. It's like the perfect bear flag sitting in here. And the one time that I stop shorting it, I can guarantee you that it's going to break down. So for everybody, I probably will not short it tomorrow, and then everyone else can benefit. But seriously, if you take a look at this and you overlay the 12 and the 22, you can see how they're rolling and this cross. I don't buy things that cross like that. I don't buy things that are breaking their 50 on the RSI. I don't care if they go higher. It's not sustainable unless these start to revert. Yes, moving averages are lagging indicators. They are. And if I have a divergence like this, you know what it's not? It's not a lagging indicator. It's a leading indicator. Okay, this led you to know that eventually you were going to have an issue. Here's your issue. It's not rocket science, guys. These divergences work. They do give you an edge. Whether or not you know how to read them and make sense of them is something else. It's like a tool in someone's hand. You can put a hammer in one guy's hand, he can build a house. You put a hammer in some other guy's hand, he can't hang a picture. I want to watch this, but to me, it looks like Spotify setting up to get up to this 55 and then roll. Just see if you can get through that 55. This is pretty nasty stuff. And I do want to just talk about some of this SLG and what I see happening if rates come down. And now we're going to have to readjust this entire thought process because now we don't know if they're going to come down. We don't know that because of what we're seeing around. So now we have to see how rates are going to act. What are they going to do with this debt load? What are they going to do? How are they going to reconfigure Fitch? Because Fitch is not the be-all end-all. The be-all end-all is when Moody's does the same thing. And if they don't do it, or they being derelict, there's a whole thing that we can go over. But it becomes a point of the more that you see this, the more issues that you can have. But you're seeing these XLRE names all break out. Okay, this looks fantastic versus where it was. So I would start looking at these names. I would not sleep on this. I would not sleep on basic materials. They're hitting all-time highs, some of these names. Look at this SCCO flipping on copper. Okay, these are not signs that you are going into a recession. These are signs that you're heading into an economic boom. Do with that what you will. That's it.